I'm Jay Bruns, the Senior Climate Policy Advisor in the Office of the Insurance Commissioner here in Washington State. And I'm looking forward to having a chat with our Commissioner, Mike Kreidler, about his long tenure working on climate change and insurance. Commissioner, it's great to be here with you, and I'm looking forward to hearing from you a little bit more about your career. I've always been impressed, having come to this industry in the insurance industry in 2004. You were already a big presence in this, and a thought leader on climate change. And we'll talk about it a little bit more, but I'll be interested in your views on how it came to be that you started the Climate Risk Disclosure Survey, which as an insurer, all insurers at the time had to work on this. But you've done so many other things. You're very active internationally. You've also done a great job, in my view, being an educator for the people of Washington State and the industry and your fellow regulators, both in the United States and internationally, on climate change, how it affects insurance, and what insurers can do. So I'm really looking forward to hearing a little bit more about this. And first, I know, of course, we're very well familiar with your 24 years as insurance commissioner. But I know also that you served in the Washington State Legislature before then, and you also served in the United States Congress. And I'm wondering if you also worked on climate change there. What was it that got you really involved with and interested in working on climate change?
I would say it would be going back to when I was in the legislature, on the Energy Committee in the legislature, and Representative Dick Nelson was very, very active with the issues around climate change, and it was really more focused at that point, trying to diminish our potential dependence on nuclear power. Which actually I find interesting, because now nuclear power is kind of looked at as kind of like, hey, that's a whole lot better than putting carbon into the atmosphere. But at the same time, back then, it was trying to get more and more efficient with our use of electrical power. And but part of that discussion came down to how can we reduce the amount of power that we're using, and how is it generated. And so it started there. But when I went to Congress, I was on the Energy and Commerce Committee, and the Energy Subcommittee in particular was focused on this issue. We started talking and having issues and study sessions around carbon sinks, how we could build and forests, or I should say build forests, or encourage forest development so they became an attractive point for collecting carbon, and how can we recognize it. Very early discussions about how we could potentially have some kind of a carbon market that could be established back then. But that was really probably the beginning for me of having that. But then when I left Congress, not by choice, but when I left it in 1994, at the end of 94, then in 95, I was appointed by the governor of the state of Washington to the Northwest Power Planning Council. And in that capacity, we obviously started talking more and more. That's where I started really, it was one of those where it was fairly broad. I was in the legislature and in Congress, and it really started to focus down when I was then on the Northwest Power Planning Council, because there we really were up against, there was limits on demand, on how much we could supply. There was a lot of hope through natural gas at that point, and I think it really, many of us looked at natural gas and said, it's kind of the Cadillac of carbon but it's still no different than coal. It's putting carbon into the atmosphere, and I think that's one. But at the time, it was so much less. It was seen as a way we could go, and would have been in the 90s. But then, once I was elected to insurance commissioner, it afforded me the opportunity to really start to focus on what are we doing and how are we doing it, and that really became a major cause for me throughout my 24 years as an insurance commissioner.
Right. Well, that's really interesting that it was really through saving power that early on in the state legislature that got you interested in this. I also know, I love the story that you were a smoke jumper once, and it sounds like maybe you weren't focused that much on climate change at the time, but I can imagine that the job that you did then, as you have reflected back on it in your career, that must have had some effect on your thinking as well.
Well, I think where that particularly comes true is that I don't think the average person has any idea what it's like to be out on a fire line, and particularly if that fire starts to go bad. And when we use that saying, it going bad, it usually meant that it was coming back on you, and it was or there was the potential of that, or it was going to be a blow up that you wouldn't be able to manage, either to be able to suppress it or be able to get away from it. And I have really developed an appreciation over the last 20 years of watching some of these fires, because they're not the usual fires that we're talking about, not the usual forest fires. They turn into real fire storms. And the difference between a forest fire and a forest storm is very different, because a fire storm is one where the oxygen is depleted completely. It's all sucked up into the fire. Temperatures are very high, and it can move at a very rapid rate, and it becomes a storm. I think it always likens me back when I think back to World War II and the firebombing of Dresden and what that represented. That's the kind of what happens with a firestorm, and that told me that that's becoming more prevalent because of climate change. It is clearly something we've got to do something different about. It would absolutely chill you to the bone when you are exposed to the proximity to a firestorm, because it is not something you cannot run and you cannot hide. And that's a scary proposition.
Well, we saw it. I remember traveling with you to Paradise, California, 6 months after that firestorm that basically devastated a city, town of something like 85,000 people were there, were living there, or 65,000 were living there that morning. And by that evening, no one was living there, and 85 people died, and something like 94% of the homes or structures were burned to the ground. That's not something that I think was normal in years past.
Absolutely. I mean, you had to see the level of devastation. If that becomes much more common, and there's no reason not to suspect with climate change that it won't if we don't take action, then there's something to be very fearful of, because it's going to cost a lot of lives, a lot of property. And if we can play a role in that by making sure that insurance is playing an active role of helping to foster good development, safe development that helps to minimize that kind of risk to a project or to a development, it's going to be a big savings to society.
Well, let's turn a little bit to insurance and climate change. You know, insurers in the United States, of course, have gotten out of the flood business in 1968, at least for private homes. And as you know, insurers are looking more and more with a jaundiced eye about wanting to offer protection for wildfire in wildfire-prone areas, especially true in California, but true in Colorado and true here in Washington State to some degree. How do you see the insurance industry taking on this challenge, and is the model that we have for insurance today, private sector insurance, privately held insurance companies offering insurance, is that the model in the future, do you think?
Well, I think that's true, and I think it's also true that insurance companies are becoming increasingly very apprehensive about insuring fire risk. I mean, when you think of homeowners insurance, you think of fire insurance. I mean, it's a fire policy is what was the principal focus of having insurance, homeowners insurance, as it was created and evolved. It is fire insurance. What they're trying to take out would be the kind of fire that comes from externally. It would be the ones, particularly ones like firestorms,
right,
that could just obliterate entire communities in a matter of minutes. That's what they're very fearful of. I think we're still quite a ways away from giving relief to the insurance companies on this issue, essentially turning the indemnification over to the federal government in some capacity or another, much like we do, as you pointed out, with flood insurance. Though there are companies that are already asking if they can file products that would not cover forest fires. And so they're already knocking on the door. Nobody's granted that. Nobody intends to grant it. But the fact that they're out there and already knocking tells you that this is something that's the direction we're going to wind up going. Are there steps that we could take that keep them in that market, that they can? It's an insurable risk, and we've developed those communities are situated in their development and land use and building code practices and the like, that it will permit them to exist and not be a risk, an added risk of fire to that policy.
So that's the way of the future.
I think we have to go that route, that form of mitigation. And of course, it helps a lot if we just stop putting all this carbon into the atmosphere and increasing the risk by dialing up the temperature every year. That's only going to make it worse over time.
Drying out the forests. I'm curious to hear a little bit more from you about this climate risk disclosure survey. It's kind of maybe an inside baseball thing for insurance, but it is a requirement on all insurers operating in the United States of a certain size to report annually on climate change and how they are facing this risk and what they are doing to address it. And the upshot is that today about 85% of the insurance policies written in the United States are written by companies that have to report on climate change. And the thing that I find very interesting in this is, especially as around the world now, central banks and banking regulators and the U.S. Securities and Exchange Commission are looking to try to figure out how to require companies to report. Well, guess what? Because of some of the work that you did, large insurers operating in the U.S. have been required by their regulators to report on climate change annually since 2009. And the reports are the other thing is it's not aggregated information. Each company report is available to the public, so the public can go and read what a company says about insurance and compare what they said 5 years ago or 10 years ago. I want to know a little bit more about how that came about, what your thinking was, and tell us the story on that.
When I was elected insurance commissioner in the year 2000, I can tell you when I became familiar with the operation of the National Association of Insurance Commissioners, it became clear to me that they weren't doing anything in the area of climate. It was not really on their scale. And I think part of it was because climate change was so politicized, and it continues to be politicized. But it was even more so at that point.
More so then.
It really was. It was. There were states that were with most insurance commissioners being appointed by governors, and the majority of governors were in a position where they could not support climate change because a majority were Republican, and they had to take that position whether they believed it or not. Because a lot of the early thinking actually came from Republicans on this topic. It's just that the politics of it changed so much that they were forced out of it. And it was at that point that it became clear that one of the things that you really needed to do is to find out what are the insurance companies doing. The last thing I wanted to see was, as one sage from Nebraska said, which was who owned a number of insurance companies, that it's just a matter of pulling back and getting out of markets or changing rates, and that's all we'll do is if the risk becomes more significant. Well, that becomes not all that great, because one of the things that I was certainly aware of, even as I came in as insurance commissioner, were the impacts of Hurricane Andrew, particularly on the state of Florida. And it became very clear that you tried, if an insurance company in Florida tried to say, we don't want to write coastal areas any longer, they were told in legislation by policymakers, yes, you will write, or you will write nothing of any line of insurance, property, casualty, whatever. You will not do it in the state of Florida unless you do also include covering those coastal areas.
Right. And
that became a real wake-up call for the insurance industry. Though Hurricane Andrew came and went, and then more time went by, and it was a little bit quieter hurricane-wise. Then it starts to kind of pull back, and the politics takes place, and you have people on the Senate floor coming out and because they had snow in Washington D.C. and brought a snowball in and say, "Hey, climate change, what kind of warming do we have here?" And dealing with it so superficially and anecdotally without looking at the overall trends, because the trends are so painfully clear. That it's only getting hotter and drier, and the effects of climate change only that much worse. And insurance companies, I think, it showed increasingly it was somewhat difficult, and depending on which companies we're talking about. But a number of them were really much more enlightened and said, "No, we've got to figure out some way to deal with this, because if we don't, we're going to get dictated to." And there is a public perception that insurance companies have more money than God. And that's not true.
Right.
And we'll go bankrupt, and we will not be solvent any longer. So if we want to stay in this game, we better step up to the plate.
Yeah. So insurers were, some were reluctant, but overall they saw it in their interest as well.
Oh, absolutely.
To step into this. And I think also over time when they found that there were not the downside risks that they were afraid of in the beginning on publicly reporting, that they were kind of more involved and more comfortable.
Yeah, they were very fearful of litigation.
Yeah.
That somehow just reporting this would provide an avenue for being sued by other interests.
Yeah.
And therefore they didn't want to report anything for fear that they would get sued. And it's true, the United States does have a reputation of being more litigious than many other societies. And
True.
but at the same time, this is one where you can't run. I mean, you can't say, well, we're going to ignore this and see if it just doesn't go away. No, we got to step up to it. It's got to be meaningful, and you've got to show that we're really making changes. And it's not a matter of just changing the insurance companies. That's a big part of it, so they establish standards of what they expect in the way of if they're going to offer insurance products, but in particular geographic areas, you've got to make sure that there's standards that are adhered to. But this is one where if they fail to do it, they're going to be told to insure there, and yet there won't be any backstop for them.
Right. Well, I'm interested in the NAIC, as you described. You became the standard bearer for insurance and climate change especially by I think helping to form and then running something called the working group on climate change. It actually changed names, I think. It was the Global Warming Working Group at the beginning, and then the Climate Change Working Group and the Climate Risk and Resilience Working Group. I think you chaired that for almost 20 years. Can you talk a little bit about why the name changes and also how that kind of figured into what you were doing at the NAIC?
Well, I certainly think there were, even society was changing too, and how they saw the risks and the like. So the description would change over time, but it was clear that there were some. I mean, I remember being approached by well-meaning National Association staff who said, could we take this word climate change out of this? Because it's so politicized. And I'm going, yeah, well, it might be politicized, but it's reality. You just can't walk away from it. And I said, no, you got to have climate change in there. You have some way of describing this. So if you hear the description, you don't have to ask, what is that?
Yeah.
You'll know what it is. You'll know it's talking about making changes and how we report and the steps we're taking. And I think this is one where hopefully, as we become more sensitized, we're going to be able to be more sophisticated in our assistance to the insurance industry, to what do they need in order to see insurable risk and to be able to continue to be heavily involved in the future. I think part of what we get from having a reporting system is that you have something you can point to and say, this is what this insurance company is doing, rather than saying they're ignoring the problem, or they'll just stop writing and move on to other states or other geographic areas and just leave this one. And of course, there's more and more leave, then you won't have insurance.
Yeah. Well, I think that, because you stuck to it, eventually the NAIC kind of caught up, I would say, because in 2021, the executive decided to create an executive level task force called the Climate Risk and Resilience Task Force. And for those who know the NAIC, building a task force, an executive level task force, is much higher profile in the organization than a working group. And you became an executive a co-chair of this newly formed Climate Risk and Resilience Task Force. And ever since, it's gotten, I would say, that the visibility about climate change and insurance inside the NAIC has really grown. I think there's something like 40 states that are members of that executive level task force. Can you talk a little bit about that transition?
Yeah, I think it's a real reflection of society also changing and starting to recognize that climate isn't something that's just something that fuzzy-headed liberals are talking about. It is demonstrable, it's here, it's tangible, and people are, you just don't hear the level of politicizing that you did even 15 years ago, or 20 years ago. It was much more like, it's just not real. It's just the swings in normal temperatures and over time, and this is just not outside the norm of what we should be expecting. And I think that getting to the point where you pull back and say, no, something else is happening.
Yeah, that thinking is behind us now, I think, largely.
But that was painful at the time, just because you had that, and of course the oil industry and the coal industry were spending a lot of money on that kind of pseudoscience, and in order to try to obfuscate what they were doing with carbon in the atmosphere.
Yeah. Another feature of your career has been your international involvement. And I'm thinking about the Sustainable Insurance Forum, which was created in 2016. You were a founding member. There were only 2 U.S. regulators who joined. I think there were 8 who joined in all in the very beginning, you and your counterpart from California. Today, there are 38 members of that. And obviously, right prior to that was the Chief of Parties meeting in Paris, where the United Nations members agreed to set a target on climate change. Can you talk a little bit about what caused you to want to join that? Why you found it so compelling, and then you've just recently joined another, the Forum for Insurance Transition to Net Zero, also a UN organization. This isn't so much regulators as much as insurance industry, but regulators are part of it as well. What caused you to want to be so involved internationally?
I think the latter one is one it's a matter of time, and I think it's going to be in the same position where the majority of states are going to be winding up joining it and going to be a part of it. It became clear to me, that part of the challenge in convincing the kind of free enterprise approach to insurance that was being advocated by the U.S. insurance market, without real consideration of saying we can just leave this market if the climate becomes more of a problem, and we're just not right there, or raise the rates so much, and that was becoming clear that was not sustainable. You could not do that, and I think that's one where having the Europeans in particular were ahead of us. And we could look toward the Europeans and say, okay, that's where the Europeans are. The major reinsurers are headquartered in Europe. We have got to make sure that we're a part of this game, not just following along. We've got to be joining with them. And I think we've done a pretty good job of trying to catch up with them, but it's still touch and go. I think there's just a different mentality in Europe with their regulators and how they operate, and that was certainly one of the motivations for looking more to the Europeans too. Is because if the National Association of Insurance Commissioners did not step up to this issue, it was pretty clear somebody else was going to fill that void from the United States, and it was probably going to be the federal government.
Mm-hmm.
So if the NAIC wanted to provide their continued leadership in insurance, which I strongly advocate for, if they wanted to, they've got to find some way to be able to step up to this issue in a meaningful way. And using the Europeans, because of some of the Solvency II debates that were going on as to regulatory forms of insurance between the Europeans and the U.S., we needed to make sure that we were there to represent U.S. interests and U.S. insurer interests. And the only way you could do that is making sure that the U.S. insurers were doing their fair share. They clearly were not. And initially there was a lot of resistance because they were just so, at least verbally they would say they were so nervous about litigation,
Mm-hmm.
which has not been borne out.
Right.
They have not seen that as a problem. I think it was more of an excuse rather than actual fact, and that's the way it's turning out to be.
Mm-hmm. You know, the final area that I think where you've really added a lot to the insurance and climate change debate is with the public outreach you've done. And I think you started in 2016 with the first Commissioners Climate Summit, and it's evolved now to become a Climate Summit series. And every year you do, I think, interesting programming, everything from kind of highlighting what some Washington-based companies like Microsoft and Amazon are doing on climate change, to giving the Institute for Building and Home Safety a platform to talk about how Washington State residents can harden their homes against wildfire, to telling the story about the Methow Valley, a rural area here in Washington State that built a climate action plan, and how it's helping them, and helping them also to get grants from the federal and state governments to do more. It's kind of a template for maybe how rural areas can do more to protect themselves on climate change. And it's really been an interesting road, and a lot of it's designed to help educate your citizens in Washington who are who you represent. It's also designed to inform the insurance industry writ large, as well as your regulators, your fellow regulators in Washington State, or excuse me, in the U.S. and in Europe. And in fact, several other regulators have followed you now. They've also started to do a climate action or climate reporting like this. And I'm just curious what caused you to have this to get going on this climate summit.
Well, there's a number of other types of areas in insurance where you see this kind of focus taking place, and have over the years by regulators, usually much more into the more regulatory aspects of insurance. Whereas this was one where we were talking about climate, mm-hmm. and what we could do, and what was happening. There was a huge vacuum. Mm-hmm. And I saw it as one of saying, I'm not sure the state of Washington can be successful in the big picture long run, just because we're not being hammered as hard as southern states, whether it's California to Florida, are. But at the same time, it's something we could do a whole lot more with, and saw that as a great opportunity to be able to do that. And it's turned out to work incredibly well. It's long overdue that we have that kind of spontaneity, and I think it's working with communities. In the end, is the only way you can win on something like this. If it becomes politicized, we're doomed.
Yeah.
If it's one where we can turn and say, this is in the common good, And it's kind of going back to our forefathers. Our forefathers as a country focused a great deal on posterity. That's what we've got to be doing now, because climate change isn't something you see on a day-to-day basis necessarily. But there's events and so forth, but it's the overall what's happening over time. And so it's not necessarily this generation, not my generation, not my kids' generation or my grandkids' generation. It's the future. And so the more that we start to get people involved in recognizing and solving these issues, a good way to do that is to have a conference where you can get some of the experts there to tell us how and what we can do to make it work better.
Well, I think that is a wonderful place to wrap this up, and I want to thank you very much for offering your perspectives over this long and successful career and the careers that preceded it. So, Commissioner, thank you very much for your time.
Thank you. Appreciate it, Jay. Appreciate the work you do.
Thank you.